Here in Section 2, we're going to place customs clearance in the context of the overall global supply chain. This theme that we've spoken of incessantly, the integrated supply chain, bringing together all internal and external activities to synchronize and align the supply chain to the benefit of the organization and ultimately its customers. This theme of integration, both within a supply chain and logistics activities, is the principal overall message of this module. Let's begin with a definition of customs clearance. What exactly are we talking about here? So we can level set the conversation and accelerate that discussion rather quickly. In general terms, customs clearance is the process through which a U.S. importer is required to present electronic details related to goods that will be entered into the commerce of the United States from a foreign country of origin. There's some terminology here that we want to summarize quickly. We'll see it over and over again. This term, enter into the commerce of the United States. That is a technical term used by U.S. Customs and Border Protection to portray this process of clearing goods through customs. We'll see that phrase a lot. Second sentence, first paragraph. Administered through U.S. Customs and Border Protection, CBP as we will call it, as well as other partner government agencies, the electronic submission of trade-related information is conducted through CBP's trade portal, the automated commercial environment. This single-window electronic trade portal through which all import and export activity to and from the United States is conducted. We're going to talk a lot about ACE. Second paragraph. The customs clearance process, which we will also refer to as a customs entry, focuses on what is referred to as the classification and valuation of goods in order to determine two things. A, compliance with U.S. CBP and partner government agency regulations, and B, calculate any duties owed to the U.S. government. We'll study in detail this whole idea of classification and valuation, C&V as it's called. If you're not familiar with it just yet, not to worry, you will become very familiar with it. What we want to do here is establish what customs is all about and what the customs clearance process really means. Compliance with the regs and the calculation and accurate payment of duties owed to the government. Second sentence, second paragraph. The vast majority of information required to complete a customs entry is found on the overseas vendor's commercial invoice and packing list, as well as details found on the transport document, be it an ocean bill of lading, airway bill, etc. This is important stuff from the idea of integrating the supply chain. One of the key messages we want to convey here is that the success of a customs entry is going to depend a great deal on information that is provided further upstream in the supply chain, predominantly from the vendor. More on that in upcoming slides. To wrap this slide up, let's say that at its core, the customs clearance process constitutes a vital component of an integrated logistics program and is critical to the overall success of an import supply chain. Let's move on. Let's start out by reiterating our title to these slides, Customs Clearance and the Integrated Supply Chain. That's what we're talking about here. Where does customs clearance fit in and how it is impacted by these other supply chain activities? First bullet, because customs clearance is a regulatory procedure that takes place downstream in a supply chain, both the characteristics of an entry as well as its execution are impacted by multiple upstream supply chain activities. And when we say downstream in a supply chain, meaning that customs clearance in the United States, we're getting to the tail end of the supply chain of logistics activities. That's what we mean by downstream. Second bullet, specifically, both the classification and valuation of an item, C&V, as well as its country of origin, are influenced by decisions are made in areas that include research and development, sourcing, and purchasing. We will define C&V in detail, as we said already, but for now, classification is determining what a product is, and valuation, as the name would indicate, is its worth What is its entered value, as it's called, coming into the United States, upon which duties will be assessed? Last bullet, in order to understand this upstream-downstream relationship, it is important to first define country of origin as well as classification and valuation. We've seen this term upstream-downstream before. We saw it in sourcing. We saw it in purchasing. We certainly saw it in our logistics components, air freight, ocean freight, etc. It's a very common theme. And because we're getting further downstream in the supply chain, at the point of customs clearance, upstream activities that influence customs clearance become even more relevant. Let's start to talk a little bit about country of origin and classification and valuation. For purposes of importing goods into the U.S. and paying any customs duties owed, the country of origin is really, really important. For reasons we'll discuss later, but let's just get it in our minds that the ability to determine the true country of origin of a product is essential to a successful customs entry. To provide one of dozens of definitions that we'll see in this module, in the second bullet point we see, USCBP defines country of origin as the country of manufacture, production, or growth of any article of foreign origin entering the United States. An imported item could be a manufactured good. It could be an agricultural product. It could be fish caught in the waters of a specific country. We're going to look at that in detail. Third bullet. Here in the United States, the country of origin of a product is a determining factor in assessing any customs duties owed to the U.S. government. What that means is that depending on the country of origin, a product could have a different duty rate. It could very well be the same product, a flashlight being imported from potentially 3 or 4 different countries. It's the same flashlight with the same characteristics, but the country of origin could determine different duty rates. That's what we mean here. As a note to wrap this slide up, because it is so complex, the topic of country of origin will be covered in a number of upcoming sections in this module. Not to worry. Moving on to classification. Product classification is the process through which a prose-based description of a product is converted to a 10-digit number. And that number, as we will see, is based on the nomenclature found in the Harmonized Tariff Schedule of the United States, the HTS-US. That's a lot of info in one bullet. Classification comes down to taking the product description off of the overseas vendor's commercial invoice and converting that prose-based, word-based description into a 10-digit number that is provided in the HTS-US. We will see multiple examples of how to do that. Second bullet, the classification of a product is based on a couple of things. First, its essential character. What is it? Well, it's a flashlight. It's going to have a classification as a flashlight. But along with other factors, potentially, like a product's intended use or the raw materials that it's made of. Making that determination upon which classification is conducted is a product-specific exercise. Essential character is a big part of that. So is intended use and the makeup of the product. We'll see more on that later. Third bullet, when combined with a product's country of origin, classification allows for the calculation of estimated duties, if any, owed to the U.S. government. An important linkage here. The classification of the product lined up with the country of origin is going to tell us as the importer if we owe any customs duties. Sometimes we do, sometimes we don't. It's all going to depend on the product, its classification, and its country of origin. As another quick note, a deep dive on the topic of classification will be provided in upcoming sections of this module. That should come as no surprise. Last slide in this section. Let's talk about valuation now. Valuation is the process of determining the correct value of an imported product for purposes of assessing customs duties. This might seem like a fairly common sense subject, but it gets a little bit tricky, so we're going to dedicate some time to it. Second bullet, valuation is closely tied to the price charged by an overseas supplier for a given product. Once again, we see the supplier coming into the story here. First, we spoke of the product description on the supplier's commercial invoice. Now we're talking about value and the role that the supplier plays. The whole concept of valuation, as we see in our sub-bullet, is based on a concept referred to as the price paid or payable. That has a specific definition. We'll see it very soon. Something else that we're going to see soon is first mentioned in our third bullet. There are a number of ways to place a value on an imported item. Transaction value, which is the most common, we'll see that quite a bit, but also computed value and deductive value. This is where things get a little complicated as it relates to the valuation of a product. Of course, as a note, a deep dive on this subject of valuation will be provided in upcoming sections of the module. In this section, we wanted to set the stage, putting customs clearance in the proper context of a downstream activity in a global supply chain. We're going to continue that conversation when we return and talk about specific supply chain activities that impact the customs clearance process. This is super interesting, so please do come back quickly.